Good morning, guys. Here we are. It is January the 1st, 2024. Happy New Year. It's 8:12 in the morning. And the reason I'm recording this video, I'm not too much prepared, to be honest, but prepared enough to actually, I think, do a great start of the video series here. Because my plan is I want to provide more and more video content to you for free, no strings attached. And in fact, yesterday, I did a poll on my Instagram and asking, like, what would you like me to share more in my stories, personal life? Document what I do, inspiration, motivation, trading knowledge, or real-time market analysis. And trading knowledge so far is winning out. Now the poll is still running, but I want to lead by example and actually get right into it. Because many times people ask me, or maybe for those who don't know me too much, so I run the Hedge Fund Mastery. It's essentially a educational institution where I teach my students everything about trading the market, how to build a profitable trading strategy, how to acquire the trading skills, the abilities, the knowledge, the experience, the mindset, the psychology, all of these things. How do you become a trader 360 degrees? So this is what I do in my mentorship. Now, I understand not everyone is interested in a full mentoring or has the mental or financial or whatever other capacity to do that. So that's why I want to provide more and more and more free knowledge in order to help people out with just, things that actually matter and can help them. So today, because I literally decided to do this video 2 minutes ago, I will be taking help from this presentation here. And let me just scroll back to the very beginning. This is actually about Bitcoin. And I'm actually using the presentation here that Michael Saylor recently gave. He's the executive chairman of MicroStrategy. I will not go too much into who he is. He's a very strong Bitcoin advocate, and it's very worth to start, exposing yourself to this man's thoughts, explanations, and ideas, in my opinion, anyway. But I understand that it could be a little bit too much or overwhelming from the very beginning. There's a great podcast called actually "What is Money?" The better you understand what money actually is and what impact it has and what potential and future we could be looking at, the more chances you will have to understand that. So I'm taking his presentation and I'm giving it back to you in my own words, a little bit simplified, a little bit quicker. So in order to give you, I think, a great start into 2024. Because if people ask me, what's the best trade? What's the easiest trade? Well, right now, everyone is somewhat crazy about this Bitcoin ETF that looks to be getting listed now finally after many, many years of struggle in the next coming days. And there's a lot of hype building up around Bitcoin. But I think there's still too many people out there that don't really understand what is Bitcoin and why does it matter. Is it just a speculative bubble? Is it a tulip bubble, as a lot of mainstream media has titled? And I want to help to create more awareness, more knowledge about the topic of Bitcoin and why it is something that you absolutely should understand. So, first of all, we have like a big economic war raging worldwide for asset classes. You can see that right now. The global asset value is around $900 trillion, okay? And of that, Bitcoin is only 400 billion. It's a little bigger by now, 750, something like that. But you see gold is 12 trillion, art is 18 trillion, cars, collectibles, 6 trillion, stock market 115 trillion, real estate 330 trillion, bonds 300 trillion, and just cash money 120 trillion. So we have this is basically the total market that exists out there, and these asset classes share in. And you can see just like how small Bitcoin still is in the big scheme of things. That tells us that there is a lot of potential. But again, we're not just looking at Bitcoin from the lens of a speculative asset. I really want you to have a better understanding about what Bitcoin is. And I think this presentation is really, really good. So first of all, now everybody knows the US dollar. Everybody uses the US dollar. And I think there's a common agreement on that. The US dollar is more or less the strongest currency in the world, right? And what people call a reserve currency. But this world reserve currency, the US dollar, is basically collapsing versus assets like the stock market, the S&P 500, real estate, Gold, art. So you can see like these assets, they're going higher and higher in prices, but are they really getting more valuable, or is the worth of the money getting less? That's a very interesting approach here, very important to understand, because in fact, the value of the US dollar versus consumer goods in the last 100 years has actually dropped by 95%, which means that how much could you buy with $1? Yeah, in 1920 to 2020, for example. And that is really a staggering number. I'm sure everybody knows that the amount of money buys you less and less goods, right? There's this meme where you have basically you go to a supermarket, $100 20 years ago, you would get like a full cart. Now you get like 2-3 items, So that's inflation. That's basically the purchasing power of your US dollar versus consumer goods has dropped 95% in the last 100 years. Now, gold is what people consider a store of value, and historically over many years and generations and empires, in fact. And the US dollar, especially after the Second World War, was that one currency that basically after the whole Second World War, the US created this new paradigm, and there was the Bretton Woods Agreement, and essentially all the countries stored their gold with the US that would like administer it and keep it safe, and then they would peg their own currencies to the US dollar, and the US dollar would be backed by the gold reserves. Now that was changed at some point. Why? Because the US was spending so much money that they couldn't continue to back it with the gold. The gold was not enough. So what they did is essentially they removed the US dollar from the gold backing. And this is what happened here. The famous Nixon did that. And you see that the price of the dollar actually then started to drop versus gold dramatically. Because, suddenly the dollar was more available, more inflated. And that's really the whole point that makes Bitcoin so different. And I'll explain that a little bit more in the video of why you want to store value in an asset that cannot be manipulated and controlled by another entity. And this is what central banks do. Central banks can create the amount of their currency to their liking. So there's trillions and trillions and trillions of dollars created by the Federal Reserve in the US and by the US government making debt. And that's essentially what led to that situation as well. Obviously, at that time, it was much less than it is today in terms of debt, that the debt the US government was taking was not possible to continue to back this with gold. And that's really why they took it off at some point. But you also see that the US dollar lost a lot against the S&P 500 index. Also, 99.8% in the last 100 years. That's very crazy. So again here, the stock market seems to be a good hedge against inflation. So the value of the dollar lost, but the stock market actually gained. So if you kept your money in the stock market, then you would have at least outpaced inflation, right? Well, not completely, but better than keeping it in cash for sure. So, and here's another very interesting example. So the dollar also lost 99.8% versus the Miami real estate. Why the Miami real estate? It's just an example. Basically, the point of inflation is that, or the tricky part of inflation is that, and they do this all the time, they trick you with that inflation CPI number because they measure it against non-fixed values, So for example, the basket of goods and services that they use for the CPI number, they changed that. For example, when beef got too expensive, they removed beef out of that basket and put in more chicken so that the inflation number looked less high. And so like if you measure inflation something that is variable, then it's difficult to grasp the inflation. However, if you measure inflation something against something that is fixed, then it's evident very clearly. So here, if you look at the amount of beach that is available in Miami is fixed. You cannot create more beach here. That was the same amount of beach 100 years ago, and hopefully in 100 years, there will also not be more beach. Probably, if anything, will be less beach when the sea rises. But what I'm trying to say is that because you cannot at will create more beach, the value of the beach properties goes up. Because it's scarce, it's limited, it cannot be inflated, all right? And that's why the dollar lost a lot. So as the money in circulation increased, more money produced by the central bank, the value of the things that you cannot increase actually went up, so it's just basically adjusting for it. It's not really getting more expensive in a way that it gains in value, right? And we think of the dollar as the strongest currency around, right? But the dollar, as I've shown you here, has lost massive amounts of percentages, basically 100%, its complete value over just 100 years, over 2 or 3 generations of living, So how are you supposed, and think about that. Your grandparents, your parents, you go out into this world and you trade your life force, your life energy for money. You get paid for money, right? And think about your life energy as being your most scarce good that you have. It's like the Miami beach. How much time do you have in your life? How much energy do you have? How much life do you actually have? It's limited. So if you put in a lot of effort to get money for it, and you have more money than what you need to just spend for living, then you want that money to keep value, because otherwise you're basically, the value of your life force is being inflated, it's being taken away. And that's what happened with the US dollar. Now the foreign currencies are even worse. Because the dollar is collapsing against anything that is limited and scarce. And now the foreign currencies are collapsing even against the US dollar. So it's worse. For example, here, Argentina pesos, they lost 99.8% just in the last 20 years against the US dollar. Turkish lira, just in the last 20 years, lost 96% against the US dollar. The Indian rupee, India with all its strong economy and a rising star in the world, the value of the Indian rupee against the US dollar in the last 40 years lost 90%. And now do the math. If the dollar lost 100% against the scarce assets, and now the Indian rupee lost 90% against the US dollar, then how much did the Indian rupee actually lost against scarce assets? It's insane. This is what inflation is everywhere, guys. It's not just a few years old when it came back into the headlines. It's so important that you understand these things, because this is what makes all the difference for you to really understand why is Bitcoin an interesting proposition that you should know about and then make your decision. Pakistani rupee, Brazilian real, so all of them. So in order to preserve your wealth, you must convert your currency into assets. If you keep the exchange for your life force, for the labor, for the time you've spent, if you keep it in currency, it will lose value. So that's why the rich, especially, put it in assets that are scarce. So you have only a limited amount of them, like the Miami beach, that are desirable. So people want to have it. There's demand for it. Portable. So that's the challenge with gold. Like, gold is not so portable. Like Bitcoin, for example, it being digital, you can move $1 billion, tens of billions of dollars in Bitcoin from one country to another in an instant, at the speed of light, as Michael Saylor likes to say. Now try to do that with gold. It's not possible. If you want to move tons of gold, it's very, very difficult and costly and problematic, and you need to protect it, and you need all sorts of permits and blah, 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 blah. So that, portable, not so easy. Real estate, well, in Germany, I'm from Germany, you call it Immobilie, which means it's not movable. And that's exactly what real estate is. So it's immobile. So it's not portable. Durable, so it needs to stand the test of time. If you buy a painting and you don't protect it, it will not stand the test of time. It will just, you put it outside in the sun, it will just break, So that's the next thing. That it needs to be durable and maintainable. Here you have also the challenge with real estate, is that real estate costs money to maintain. You need repairs, you have weather, you have all sorts of influences that you need to take care of, right? None of these things apply to Bitcoin. Bitcoin is extremely cheap to maintain. It's very portable. It is completely scarce. It's becoming more and more and more desirable, and it's absolutely durable. As long as we will have electricity and internet in this world, we will have Bitcoin, So, and that's really also a very important chart to see here. Most of what I just mentioned with the real estate or the Miami beach, most investment gains are driven by monetary inflation. So you see here, the S&P index, the US stock market, the best 500 companies there, it has grown over time massively in price, right? But at the same time, the amount of dollars in circulation has increased as well. And you can see they pretty much go in lockstep. So liquidity drives prices. They just adjust for the more money available in the system. This is why the prices go higher. This is why real estate gets more expensive. This is why the stock market gets more expensive, and so on. So it's very much locked with the amount of money created. If we had less money created, we would probably have much lower prices. So that's very important to understand as well. Now, in reality, there's not too many asset classes out there that really outperform true inflation. So you have REITs. By the way, first of all, you need to differentiate, let me move my head here, between CPI, that's the number that's being reported as inflation, and the actual inflation, so the real inflation. Again, if you measure inflation against something variable, you will have a much different number than when you measure inflation against something fixed. And that number is always some sort of a median or just sort of doctored number. But you can see even the S&P is not really beating the real inflation here over the long term. And this is also very important here, like the classical portfolio 60-40, 40-60 with bonds, also not. But the average investor, 2.9%, like that's so important to understand. Most people are simply not prepared to win on the financial market. Why? No education and no experience, no psychology, and a very predatory environment that is out there to take your money because they know your weaknesses and they take an advantage of it. And this is why Michael Saylor advocates, do not trade. And I agree with that, saying that if you're not... You compete when you're on the market. You're competing against highly educated, highly trained, highly equipped other counterparties on the market, and it's a fight. They take from you. You lose the money not to the market, but to other market participants. So if you're not prepared, if you're not trained, you don't know what you're doing, you will lose your money. And because by design, it's so difficult that bad habits will make you lose your money automatically, and this is why the trading industry is built the way it is. It's been sold more like of a gambling type of industry, and people treat it like that, and they wonder why they lose. Because in gambling, who wins? The casino. If you want to learn trading, if you want to be a winner on the financial market, it comes with a number of factors and trainings that you need to go through. And I'm not going to go into that. I don't want to make this a sales video here, but that's exactly what I teach in my full mentorship. Because 99% of the time, nothing happens. So there's this saying, time in the market beats timing the market. And this is a great chart to really see what that means. So it means that this is the S&P 500 return on a 30-year annualized, so over the last 30 years. Now, if you, in that 30 years, had missed only the 10 best days, the average return would already drop from 7.8 to 5.6. If you missed the best 20 days, guys, in 30 years, it's already 3%. And if you missed the 50 best days, your average return would be negative, okay? So that's why, for most people that have a job, that have other things they need to do in life, it's difficult to win on the market. You may win. Is it possible to miss out on the 40 best days in 30 years? I would say it's very much probable, even, not just possible. So that's why it's important that you understand that being in the market long-term, for someone that wants to take a hands-off passive approach, that's actually what Warren Buffett also says. Warren Buffett says the stock market moves the money from the impatient to the patient. And now I know there's ways to beat the market. There's trading strategies out there that you can learn, that you can perfect, that you can become a professional in. And that's actually what hedge funds do, what I do. But at the same time, to think that you could do it from your phone as like a TikTok, no, you won't. I'm sorry. So that's why, keep that in mind. And even 99% of companies do not really beat the inflation. The winners are rare. So the real winners that have beaten inflation since like over the last number of years are these magnificent seven, is these tech stocks. Facebook, Amazon, Apple, Microsoft, Google, Tesla, Nvidia. The S&P itself, this gray line, has not beaten it. And the remaining 493 companies have not neither. Far from that, okay? So just understand that stock picking, okay, if you take the winners, yes, but they're very, very rare. And it's very difficult to do that. Warren Buffett, again, does that. But even Warren Buffett says, buy the index and just let it for a long time. But it's really important that we understand what is money, and gold was maybe the best solution to that we've had before Bitcoin in our society here. And it actually has been used for thousands and thousands of years. But we think of gold as a limited, scared asset, right? Well, that's also not true. You can see that the gold production, the annual gold productions measured in metric tons per year has grown from, let's just say, 1,400 tons to over 3,000 tons. So they doubled the amount of gold they produce on an annual basis in these last 30 years or 40 years. So you see, so gold isn't as limited and scarce as you think. You can produce more gold. Obviously, it's more effort and technology gets better and all these things. But with Bitcoin, that's not the case. You cannot produce more Bitcoin. The amount of Bitcoin is fixed. It's programmed. It's 21 million forever and ever and ever. And nobody can change that. That's really the big proposition that a lot of people don't understand. While, and that's really so interesting, the Bitcoin difficulty. What is the Bitcoin difficulty? That's essentially the safety of the network. Like, how strong is the Bitcoin network? Can it be attacked? Can it be controlled? Can it be taken over? How many computers do I need to really be able to manipulate it? All these things. And the difficulty of the Bitcoin network has grown more and more and more and more and more massively, which means that it's the safest network around that cannot be just taken over, manipulated, broken into, or any of these things by any one entity. Besides that, the technology of that network, it's being distributed, and I'm not going to get into blockchain too much now, but it's all over the world. And that's something that's really, tells you something that it's incredibly safe. No one entity controls Bitcoin. And okay, I'm not going to get into that frequency thing. That's a little bit too out there for this type of little YouTube video here. So what is the winning economic strategy? So interesting, there's one winning strategy: hold the best money. So time in the market beats timing the market. You want to hold the best asset for the longest time possible. So if you hold cash over time loses value, right? This is time, and this is scarcity. So there's more and more and more money produced over time. So obviously it's not scarce. Now you have gold. We see that even the gold production has increased, so it's obviously not like money, but it's also not getting more scarce. Now, Bitcoin, at the same time, it's getting more and more and more and more scarce because there's less and less and less Bitcoins available. And this is why at some point probably people will not continue to transact in full Bitcoins anymore, but in Satoshis, which is like 0.000, anyway, like a fraction of it. So that's also something that tells you now still have the ability to own a piece of Bitcoin that probably in 20 years, 30 years, 50 years, 100 years, you will not. And that proposition, is it worth to consider that as a plan B? I personally think it is. And even when you say like, no, I go with the stock market, I only do regulated things, I trust the government, I trust human ingenuity and these companies to solve problems, I agree. There's nothing wrong about going with the stock market with part of your portfolio. Absolutely not. At the same time, it's also fledged with risks, right? Like companies have issues with their management, their labor, the competition, technology, regulation, taxation, wars, as we've learned in the recent past again and again. And we're on the brink on a number of them, hopefully not, but it's not looking less likely, I'm not going to go into geopolitical now here, but there are complications here, there are risks, At the same time, Bitcoin exists in cyberspace. It's not like physical. Nobody can destroy it like that because it's distributed in a physical world. Bitcoin servers are everywhere. It's digital. It's immaculate, as in nobody can corrupt it, or manipulate it. Immortal, as long as we have internet, as long as we have electricity in this world. And I know there's this movie now that actually done by or produced by the Obamas that Leave the World Behind. And we have Klaus Schwab speaking about a cyber attack and making everybody fearful and angst about it. I wouldn't I wouldn't buy into that reality too much. I would really look for opportunities here and solutions, because don't you think that one person or one entity rules all the world. There's different factions fighting all the time, the most powerful ones, and the way we structure our technology and the whole possibilities of it getting into one hand is what's gonna basically make us survive. And I believe that as long as there are everywhere in the world technology, and this is actually what happened, is what the internet, the gift of the internet has given us, Bitcoin is actually immortal. It's incorruptible. You've just seen the difficulty of Bitcoin, the safety of the network. Nobody can corrupt Bitcoin or manipulate it just so easily. It is truly global. Like US stock market is the US stock market, which is most of the world's money in stock markets in the US. You've seen the Chinese stock market last year in 2023 didn't perform at all, and because there's so many different factors here. But Bitcoin is a true global asset. That's also another thing that brings people together to want to keep this independent asset, not inflatable, and global. And this is why it's indestructible. Obviously, look, this is written by Michael Saylor. He's an extreme Bitcoin advocate, very, very positive about it. So you also have to see it that it's through those lenses. But none of that is wrong. It's just a question of how much value do you give that? How much do you see it the same way? And this video is really meant to inspire you to take time to study and analyze Bitcoin more and more and more. Not just now, again, hear the hype, the ETF listing, Bitcoin. Now the price is going to go up. All the people are going to FOMO into it. They're going to buy it probably at a high price, and it's going to crash after that again because it's always done that in the past. And then everybody's going to hate it, and they're going to sell it. And then the smart people will pick it up, and then the whole pattern repeats. No. Understand the asset you're buying. This is how you win on the market. It's same for trading strategies. If you don't understand what you're doing, you're going to lose to the ones that do. So what do we have here? Over a long time horizon, laser focus is rewarded. Okay, so it just shows you if you hold certain assets over a long amount of time, what's going to happen to your money. So cash is going to lose its value in 100 years. Bonds is going to lose a lot of value. The S&P, let's just assume it's going to, stay in lockstep with inflation, so it's going to keep its value. S&P and Bitcoin portfolio will grow massively, and the Bitcoin portfolio will grow even more massively. Again, this is very much through the Bitcoin lens. I don't know if these numbers are actually going to play out, but I do see that this tendency doesn't seem completely wrong or out there. That's another thing. Since August 2020, you think the stock market has done very well. The NASDAQ, gold, silver, bonds, and Bitcoin, it's just outperforming, especially at this pace since it was created. Will continue to adopt that quickly, that fast. I think it will diminishing returns because the market size is going to get bigger and bigger and bigger. So you're probably not going to see as much of the same type of returns as we've seen before, but is it going to continue to increase indefinitely? There's a very high chance for that to happen, in my opinion at least. But again, you make your own mind about that. There's loads of people that have different opinions. Yeah, this is MicroStrategy, his company. They're like more or less a supercharged Bitcoin hedge fund. I don't want to get into that, but the future of Bitcoin, this brings us back to the very first slide again. So we have 900 trillions in assets. Bitcoin right now sits, I think, at 750 billion. So this is a bit outdated. And if you think about if Bitcoin would just absorb a certain percentage of other markets, so basically, for example, 50% of the gold market, 5% of the collectibles and car market, 5% of the fine art market, 15% of the stock market, 15% of the real estate market, and then that would bring the price of Bitcoin to actually $10 million per Bitcoin. Now, again, this is from a bullish Bitcoin advocate. Will Bitcoin reach $10 million? I don't know. Is it possible? Yeah, I think it is, actually. How quickly? Nobody really knows. But this is why you need to understand these reasons, research them for yourself, and then understand, do you want to save your life force, your life energy? Do you want to store it in a battery that is broken, like fiat money that loses value? Or do you want to consider some part, at least in an asset like this that you need to study and understand more? So there's a big potential for this price to continue to go higher and higher and higher, maybe absorb 200 trillion in market cap. I think this is obviously a bullish projection, but I do think it is possible. Now, there are risks, Bitcoin, there is some backdoor to it that nobody knows about just yet. Maybe it was created by some CIA. Some people say it was Putin. Those are just idiocratic risks that nobody really knows. Those are unknown unknowns. So that's why don't bet the whole farm on it, but should you miss out on it? That's a question that you really need to answer, because in reality is no country can stop inflation. 99% of companies cannot outrun inflation. Workers cannot outrun inflation, you know, and only 1% can beat the market by skill or luck. The ones that are lucky winning in trading will lose their money again because they're gambling, and the other 1% skill. That's exactly what I teach, what I do, what my career and life is about. So you need to have a professional approach to that. So how many people that play basketball become NBA players? How many people that become, Cristiano Ronaldo in football, or things of that nature? So you got to see it like that. If you want to be successful in trading, you got to take that professional approach. You can do it from anywhere in the world. There's great opportunities to really, work from your laptop anywhere in the world. Get access to capital, trade other people's money, leverage yourself up, make millions of dollars in a short amount of time. All these things are possible. But let's be honest, 1% is actually willing to do what they need to do in order to get to that point. And everyone can just buy a piece of Bitcoin, a piece of digital real estate if you want, and keep it. Self-storages. That's the next thing. Even now with the ETF, which is bringing all this hype, I would not advocate for anyone to buy the ETF. The ETF is for, corporations with all their rules and government bodies and all these inflexible big entities that want a piece of the pie, but they need the corporate structures and all these things in place for them to be able to buy Bitcoin. You can just buy a piece of real Bitcoin, like the real asset, not an ETF, not some representation of it. The real asset, self-custody it. You own that. If you self-custody and you understand how it works, and if you want me to do a video about that, I can do that too. And that will be something that you truly own, and nobody can just take from you against your will. And so that's why everybody can buy Bitcoin. I completely agree with that. And if we just look, this is the gold ETF. So the price of gold actually went up from, I think, from $400 to $1,000 something. So it 4x or so in a very quick amount of time. Once the ETF was launched in 2004. So even gold didn't have an ETF so long ago, right? 20 years ago, 19. So, and if history repeats, and often it seems to rhyme, then we have a very good chance for Bitcoin actually to, see a massive push up here. Yeah, and that's the first video of its kind. I will do all sorts of videos, all sorts of topics, trading knowledge, whatever you're really interested in. The best way to do that is that I will share a link to my group down there. It's completely free, no strings attached, no costs, no nothing. Just join the group, and so I can get direct feedback, input from you guys, what you're interested in, what sort of content I should like to do. I will share also some trades and of myself and all these things. So I really want to give you access to what I'm doing and how I'm doing it. So just join the group on the link below if you liked it. And also, if you could like and share, subscribe, all of that to this video to, distribute it through the world, I'd be very, very grateful. So this video was very quick, no real preparation. Obviously, I took the presentation of Michael Saylor here and just ran it through my own words for anyone who didn't know about Bitcoin just yet. And let's make this 2024 a great year for everyone. See you in the next video. Thank you very much.